please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome. You're watching Business Lunch. I'm Nisha Podar and with me is Sonia Shenoy. Sonia, good afternoon. Look at the markets off the day's low point of the day and in the green at this point. And it's the mid caps which are really shining in trade today. Take a look at that. Nifty 50 up 0.44% as we speak. It's the mid cap index 0.55%, which is up and smiling in the green. Some of the big gainers for the day are coming in from the IT space and Tata Consultancy Services. That remains in the news, but it is also taking along with itself the other IT counters as well, Sonia.
Yes, I know IT is the flavor of the day, right? TCS becoming that $100 billion company. But don't lose sight of what's happening with the other heavyweight pocket, which is the banks. The private sector banks are also picking up pace and making sure that the Nifty stays above the 10,600 mark. Not ICICI Bank, but the other one. So there's IndusInd Bank, Kotak, Yes Bank, all are doing really well today. ICICI Bank, of course, has issues of its own, so that's a bit subdued. But the others, look at IndusInd now, up 3.5%. Big rally after its results came in last week. But across the globe, we can't say the same because Asian markets traded mostly lower as investors have kept an eye on the rising US Treasury yields. Remember, the US yields are now at a 4-year high. And the fear now is that there could be some accelerated rate hikes from the US Fed Reserve. Not just that, the European markets have also opened mixed. Investors gear up for the latest in corporate earnings while keeping an eye on geopolitics and, more importantly, on what's happening with crude. That's been the big talking point.
Oh yes, crude has been impacting all the markets across the globe. But let's shift focus to big story here in India. And this is the story of the day which we have been picking up from the last week. And now finally the D-Day has come. TCS becomes the first Indian company to hit the $100 billion mark in terms of capitalization in the market. And it's Singhal joins us with a recap of the incredible journey that this company has had.
TCS, of course, has hit a market cap of $100 billion. And let's track the special journey of a very special company. It listed, of course, in August 2004 at a market cap of 47,000 crores, which at that point, of course, was $10 billion. And in a country like India, you'll have to take into account that rupee will always keep depreciating. So that also is an important factor. September 2006 is when it first doubled its market cap and hit 1 lakh crores. After that, a bit of a hiatus, but October 2010 is when it hit 2 lakh crores. And after that, again, a bit of a hiatus before it hit 3 lakh crores in March 2013. After that, a very quick fire 1 lakh crores was added in same year itself in December 2013. And October 2014 is when we had 5 lakh crores. After that, the Indian IT went through a bear market of its own. Values were destroyed by a lot of companies. You saw the revenue growth and profit growth fall, but TCS found its mojo back and in Jan 2018 hit 6 lakh crores. Today, of course, hit 6.8 lakh crores, easily crossed the $100 billion. What if you had invested in TCS's IPO, 1 lakh shares? Today, the value would be worth 16 lakh, a bit more than that actually now, and dividend also 21,000. Most of it, of course, is tax-free. Now, the key point here is when TCS listed, Infosys was the bellwether, and for good reasons, because it had created wealth so many times over. That, of course, would always remain the case with Infosys because it listed at a market cap of less than 1,000 crores. So TCS listed a 25% discount to Infosys, and it took 6 years for TCS to catch up with Infosys. But after that, there was no looking back. It just kept gaining momentum and kept gaining size. In fact, now it's 2.5 times of Infosys. And in fact, if you take into account the entire IT pack in India, all the IT stocks put together, even they can't match up to TCS. TCS is now 52%. Infosys, of course, 20%. HCL Tech, Wipro, and Tech Mahindra making up the rest of the IT pack. But truly phenomenal. And just one more point. It says a lot about the corporate governance standards as well for Tata Sons and Tata Group. They recently sold stake at 2,800 per share. And after that, you have seen a 17-18% rally. And of course, great results as well. So big salute to TCS from the market, $100 billion market cap.
Oh, absolutely. And since TCS listed, the compounded annual growth rate that TCS has seen is about 23%. This versus the IT index rallying about 14-odd%. So that's the kind of outperformance that TCS has delivered. But here's more from the man who spearheaded this IT giant in its formative years and now heads the group as the Tata Sons chairman. Hear out N. Chandrasekaran.
The digital transformation is going to be the biggest opportunity, primarily because there is going to be more technology in every industry, whether it's a B2B industry or a B2C industry. So we have been making these commentaries and also parallelly investing and building capabilities and being ready for this adoption cycle. And this adoption cycle is gaining momentum. And I mean, if I may say so, I think it's the start of the next big run for TCS. It's a very special moment for all of us, and I'm extremely proud. And I've always maintained that TCS has enormous potential, and the digital transformation was only going to accelerate the market potential for TCS. Technology adoption, especially in the digital domain, is picking up mainstream. I've always said that the delay is because of a number of factors. It's not only the capabilities we have, it's also the readiness of the clients, and all those things are coming together.
Okay, so that is the word coming in from the man at the helm of TCS in Chandra. But let's do one thing. Let's focus on some macro news that's coming in. There's some news flashing for you on your screen. The government sources talking about the fuel excise duty. In fact, Sapna joins in now to give us more details on all of this. Sapna, what are you picking up?
Well, more or less on expected lines, at least as of now, clear indications coming in from top government officials that, at least in the finance ministry, that probably an excise duty cut, at least currently, may not be looked into. They're also indicating that as such no demand has come in from the petroleum ministry, but they've also caveated the whole thing by saying, indicating that it's more or less a political call. But apart from this, a major concern that has been highlighted and which is well known in various quarters is a fiscal consideration. So what we are given to understand is that, probably a 1 or 2 rupee price differential in terms of the consumer impact, may be widely distributed. But a 1 rupee cut in petrol diesel excise duty costs the central 13,000 crores. And these are numbers again which are known. 4th October was the last time that they reduced petrol diesel duties by 2 rupees each. And the impact for the full fiscal has been calculated as 26,000 odd crores. Last fiscal, they have taken in some impact. This fiscal, the duty will remain at that level. So that 26,000 odd crores is going to go out from your excise collection as far as the center is concerned. So they have kept the fiscal concerns right on the top, that's first. And the second, they're already indicating that even at the current crude level and whatever translation may or may not be happening in the retail price, from the inflation perspective, the government is very comfortable. So at least as of now, this thing looks ruled out, a cut, but, it's a political call also. So we just need to be a bit alert on this front.
All right, Sapna, thanks so much for being on top of that particular development. So at the moment, excise duty cut is ruled out, and we'll keep a watch out on that one, and also how crude prices behave going forward as well. So keep an eye out for that one, and we'll slip into a short breather on the show. Up next, LIC Housing Finance as well as Bharti Infratel.
This show, you're still watching Business Lunch. It's a good-looking screen, no two ways about that. So 10,600 is holding on the index. The Tata Group stocks, TCS of course has been on our radar because of that $100 billion mark, but the Tata Group stocks as a whole have also been rallying. Just look at Titan, for example. In the last 1 hour, Titan has made its presence felt. In fact, it's moved to the high point of trade right now, and it's trading with quite a bit of volumes as well. There you have it. And a couple of other stocks as well. Tata Steel in the last half an hour, not too bad. That one too has been moving up higher. But talking about frontliners, you have Indiabulls Housing Finance that delivered a robust set of numbers. This time, the AUM growth in Q4 was very strong. The loan growth came in at a 7-quarter high, but the spreads were still, the spreads were at a 7-quarter low. So in fact, we did speak to the management, Gagan Banga, the Vice Chairman and MD of Indiabulls Housing Finance. He was very positive about the growth outlook for the company. Listen in.
The last 2 years, we've been managing to grow the book between 30 and 35%. And that's largely because affordability in the housing space from a consumer point of view has been steadily improving. Prices of homes have been flattish. Interest rates have been down, and ever since the subsidy program kicked in, it's been meaningfully cheaper for someone to buy a house as against live in a house. After the CLSS scheme, the PMAY scheme, it is very, very attractive for the salaried guy to be taking a home loan, and we're trying to do a reach out program to them rather than just wait at either the construction site or in our offices.
All right, so that was India Bulls, but HDFC Bank, that posted a strong set of earnings this quarter, though the stock is subdued in trade today. One of the biggest draggers on Nifty 50 today, at the moment 0.7% down. Abhishek Kothari is right here with the number crunching and also on the brokerage view coming in on the results. Abhishek.
Well, Nisha, as you mentioned rightly, deposit growth have been pretty phenomenal, growing at 22.5% on a YOY and about 13% on a sequential basis. So what this means is that the liquidity coverage ratio actually comes down from 90% levels to about 83, 84%. And that's a very good sign that the bank has enough liquidity in its balance sheet to make growth ahead. The core fee income actually surprised on the positive front, given the fact that, overall the loan book grew only 19% on a YOY basis. Core fee income grew by 32%, and that was on the back of retail franchisee. So overall, the retail portfolio actually grew by 28%, and that drove the fee income. Slippages have also declined on a sequential basis. Slippages have declined by 45% to about 2,790 crores. So the annualized slippage ratio at 1.7% is the lowest in last 5 quarters, and that has led to the overall credit cost for the bank being the lowest in last 5 quarters. The provision coverage ratio now touches 70% level versus 66.3% in the previous quarter. What the brokerages are mentioning is that overall they are optimistic on the stock with a target price that is ranging from around 2250 to about 2,515. Only fact is that Kotak Securities is not happy with the kind of valuation that HDFC Bank is getting. Back to you.
Okay, well, thanks a lot for that. HDFC Bank is the stock that came out of the numbers, but in some key earnings to watch. LIC Housing Finance is also in focus on the back of its Q4 numbers. Abhishek, what are you looking out for this time?
Loan growth has been tepid, Sonia. So it has been in the region of 15 to 16%. So anything in loan growth above 15% will be positive. Their NIM was at 12-quarter low in the previous quarter at 2.33%. So any improvement over there will be a positive sign. Their asset quality was the weakest in the previous quarter, given the fact that it was a 12-quarter high at 0.87%. So anything below gross NPA level of below 1% will be very positive. But remember that over the last 2 quarters, the yields on the bond market side has been rising. So how that impacts their cost of funds will be seen very closely. Now, our polls suggest an NII to be down 3.2% on a YOY basis. Let's leave the YOY factor because of a high base in the previous year. If you check on a sequential basis, the NII is expected to grow around 12%, while net profit, it is expected to be flattish on a YOY basis. But given the fact that last year was a high base, currently 8.2% plus on a sequential basis is where we are working with the net profit number. Back to you.
All right. Thanks so much, Abhishek, for getting us all those details. So at the moment, LIC Housing Finance ahead of the results is in the green, over 1.5% up as we speak. But also to look at, Bharti Infratel will also come out with its results, and that is down and trying to see some sort of a recovery in trade at the moment on Bharti Infratel. So keep an eye out for that particular recovery coming in on Bharti Infratel ahead of the results. And Bharti Airtel is the parent company, which is in the green. And take a look at some of the counters which are on my radar at this point. And there's a sharp spike that is seen in some of these mid-cap counters like JBF Industries as well as Praj Industries. So keep an eye out for these particular stocks. They have seen a sudden spurt, and that's the stock impact or the price that you're seeing at this point, 2.7% up on that one. And I was talking about JBF Industries as well as Praj Industries. But overall, market looking good, and as far as mid caps are concerned, they have really improved in terms of the gains that they have seen. So 0.66% up as far as mid caps are concerned. All right, taking it straight to some news development of the day, and NCLT that allows bid of Liberty House to be considered for Bhushan Power. And our colleague Ashmit Kumar has been on the phone line tracking all the developments very, very closely and joins us with the details. Ashmit.
Yeah, yet another interesting decision that could pave the way going forward. This one is with respect to the validity of a bid that has been submitted post the RP deadline. That was the moot point here. Liberty House, as far as Bhushan Power and Steel is concerned, had challenged the decision of the committee of the RP to disqualify their bid. The ground for disqualification was quite simple, that the bid was submitted post the RP deadline. Now, that was the moot point here. However, the NCLT, while passing its orders, has made it clear that the mere delay by virtue of the RP deadline cannot be the mere only ground for disqualification, and that is not a relevant factor as far as Liberty House case is concerned, and that the COC will now be required to consider the Liberty House bid, and to then, after that, take a commercial call in line with the IBC. So clearly the NCLT making it very, very clear that as far as the RP deadline is concerned, there is scope available, there is room available for bids that can be considered even after the deadline. So that's some important clarification coming in. Of course, as far as Liberty House case is concerned, what it effectively means is that Liberty House, which has been a contender as far as Bhushan Power is concerned, is back in the fray now and is likely to compete with Tata as well as JSW. But on the larger picture, the IBC continues to evolve. An important point of law being laid down that bids post the RP deadline can also be entertained by way of today morning's NCLT order. Back to you.
All right. Thanks a lot for that, Ashmit. Remember, Liberty being disqualified because of a default on an Exim Bank loan in the case of Amtech Auto. But I want to just, get the focus back on the markets, because what's aiding the market now is a sudden spike up in Infosys. Remember, TCS has, of course, contributed about 12 points to the overall 58-point Nifty gain. But now Infy is making its presence felt as well. Just look at that sudden spike up in the last 5 minutes. And now Infy has contributed almost about 7 odd points. So it's really the IT space that's powering ahead and making sure that this market moves higher. But moving on, in a massive blow to the Congress, the Rajya Sabha chairman and Vice President of India, M. Venkaiah Naidu, today rejected the impeachment motion against the Chief Justice of India. CNN News 18's Maria Shakil gets us more.
With this failed impeachment motion, the Congress is now crying foul, and they are alleging that the democracy and the Constitution is in danger because the Vice President of India has rejected the motion of such a nature. If you look at the argument or the order that has been released by the Vice President's office and which has been signed by Venkaiah Naidu, it says clearly about those 5 charges and the argument that was put forth by the Congress party and 6 other political parties. Venkaiah Naidu says that it is based on suspicion, conjecture and assumption, and that 124(4) of the Constitution of India essentially says that there is no proven misbehavior and incapacity. Proven misbehavior and incapacity, these are the 2 reasons on which the CJI can be impeached. So clearly, that there are no enough reasons that this more looks like a political move of a party and, allies with the Congress coming together. And this really is the argument. And let's not forget that just hours before this order was released, when we did speak to some sources in Venkaiah Naidu's secretariat, Rajya Sabha secretariat, we were given to believe that there are several legal luminaries, right from Fali Nariman, who is seen as an institution on Constitution. He had said that this is a black day when the Congress and other parties had moved for the impeachment. Then there was also that comment that had come from Justice Chelameshwar, who had said that impeachment is not really perhaps a panacea of all the problems that is there in judiciary. So clearly, after having consulted legal luminaries, top legal minds of the country, Vice President has gone ahead and rejected the motion. Of course, he has also said that, that he consulted all top minds of the country. He had also spoken to Attorney General K.K. Venugopal. But for the moment, though, a massive embarrassment for the Congress. It remains to be seen whether they will be taking some kind of legal recourse now to really go ahead and file that impeachment motion against